Let's bring in Diogo Monica, co-founder of and president of federally chartered crypto custody bank Anchorage Digital. Thanks for being here, Diogo. Maybe we can start with just the overall environment. It's clearly kind of a risk-off picture, especially in the short term. Today, you've got meme stocks selling off, crypto selling off. But you say that institutions have been holding here, or at least you've seen kind of minimal outflows from these institutions. Why do you think that is?
I think the first reason is that institutions have a very long-term horizon when it comes to investing in technologies such as blockchain, but also when it comes to the financial markets themselves. And so as you've seen retail-led movements, when there's a crypto winter, trading activity goes down, but institutions continue investing in the space because crypto is not just one thing. Crypto is not just trading. There's a lot of real products being built on top of these infrastructures, including stablecoins, that will continue being built throughout the bear markets.
In terms of regulation, do you feel like there is enough capital held by institutions and potentially elsewhere to come into this market at this point, especially what they've seen over the last few months?
Yes, I do feel like what has happened in the past 6 months, candidly, has just been 10 years of maturation of the space, just crunched into 6 months. So clearly it was an unforced error from the point of view of the crypto industry, and there's no denying that. However, one thing to be very clear on is the fact that the institutions that actually had problems and went bankrupt were centralized finance institutions. They were traditional institutions providing access to a new market. These were not regulated institutions. These were not regulated institutions like Anchorage, who is a federal bank under the guidance and under the supervision of the OCC. Companies like Anchorage had no issues during this bear downturn because we're audited, because we're regulated. So what we need more is regulated institutions and not the unregulated institutions that we've had participating in the market. And the major difference between having regulated institutions is clarity around which regulations apply to these assets, and obviously the acceptance from the regulators of having these institutions create charters.
So then you agree with SEC Chairman Gary Gensler, who wrote in the Journal, it was an op-ed on Friday where he said there's no reason to treat the crypto any differently from the rest of the capital markets just because it uses technology. He uses this car analogy, saying that, even though we've basically progressed to, electric cars and other software additives that we see in cars, it doesn't mean that we can't keep passengers and drivers safe and we shouldn't enforce things like seatbelts. So do you think that crypto actually deserves its own regulation? Is it so specialized a product that it does need specific rules of the road, no pun intended? Or do you think that it should just be kind of looped in with any other type of security?
I think it's a little bit hopeful to think that we're going to go from scratch to a whole new regulator for crypto, even though that is a perfectly fine outcome for this. And in fact, potentially, for many people, the ideal situation. The reality is that the technology is significantly different. There are things that crypto assets and cryptocurrencies do and are at its most basic foundational level that are significantly different from traditional assets and traditional asset classes. And so there is a lot of reasoning and a lot of logic behind the fact that we should have a specialized type of regulator for crypto. So that is not actually something that is that crazy to think. However, taking a step from now, a lot of lack of regulatory clarity and a lot of clarity on which regulator even applies to this and how these assets are actually treated within the current frameworks, I think that would be a better first step. And in fact, we do have Bitcoin being treated as a commodity, and we do have many other types of regulations for which at least it would be close enough. So first step might be to use the traditional frameworks that we have that have worked for decades on these assets and effectively put them in buckets. And then the next step might be to actually get a regulator that is more sophisticated even than the current ones on the actual crypto aspects, and then create a whole new regulation around these types of asset classes.